So the trading platform that I use is TastyTrade. I use TastyTrade because I think it is the best options trading platform. It's got all the tools you need to be a successful options trader. Now, there are a lot of features baked into TastyTrade, so when you're brand new to TastyTrade or just options trading in general, there's some confusion on how some of these tools work and exactly how do you go about analyzing different options positions. So today I'm going to cover some of the more advanced kind of nuanced features inside the TastyTrade platform. So one of the most important metrics when it comes to options trading, of course, is IV rank, IVR. And, depending on whether IVR is high or whether IVR is low, that will affect what kind of option strategies do you want to trade. Obviously, if you're placing a lot of short option strategies, if you prefer selling options rather than buying options, you want high IVR on the underlying stock. So, you have IVR listed all over the place in TastyTrade. IVR is one of the very first things you get at the top in the header, whatever ticker symbol you're looking at, the very first thing it shows you, even before the last price and the bid-ask spread, it shows you the IV rank because according to the TastyTrade team, that is such an important metric, they put that right there up front. And honestly, I like looking at IVR pretty much everywhere. I put it in my watch list, so all my watch lists, I like having the last price and the change percentage and things like that. But really the most important metric when I'm looking for a trade, I want to know what has good IVR. So I will go, for example, my ETFs watch list, and I can sort by low IVR or by high IVR to see which ETFs have the highest IV rank right now. And then I can place trades accordingly based on that information. Now, one of the cool things about the watch list area is that other than IV rank and also the IV percentage, your standard implied volatility metric, there are several IV metrics that you can add to your watch list if you want to use them. For example, I do need IV rank, but I don't necessarily need to look at IV index, so I'll get rid of that. And what I'll do is I'll go and add, let's see what I want to add. IV index 5-day change. Now that is an interesting little metric. This tells us whether implied volatility is expanding or contracting in that underlying stock. So this tells us in the last 5 days, has implied volatility risen or has it fallen in this underlying stock? And because, for example, if I like selling options, I like selling options when IV rank is high and I want IV to come down over the life of the trade. So I want to see something with high IVR, and I also want to see something where the IV 5-day change is declining. I want to make sure that implied volatility is trending down on that underlying because I make more money on my short options if that's the case. If instead IV 5-day change is rising, if IV is expanding in the last 5 days in that underlying, maybe I don't want to place a short options trade. And there's several other of these IV related metrics, these columns you can add to your watch list. There are also IV 30-day change, historical volatility 30-day change, implied volatility, and historical volatility 30-day difference. So the difference between implied volatility and the actual realized volatility over the last 30 days. There's a lot of really neat little metrics you can add to your watch list. And it's something, if you're new to options trading especially, you have to understand the importance of implied volatility. It's so important. You have to know what these metrics are. Also, on my stock charts, people ask me, why I have technical indicators down here, because I don't really believe in technical indicators. Well, some of the technical indicators I add are really implied volatility indicators. For example, the Bollinger Bands here basically tell me how volatility is in that underlying right now, because the outer bands give me a 2 standard deviation move for the stock. So that tells me if, volatility is kind of low in the stock right now or if it's kind of high. The wider the bands, then obviously the greater the volatility. Now let me go to a stock rather than a futures product to get a better chart to look at. I meant to type SPY. I ended up in some weird stock I'd never heard of. Here's the SPY though. So this indicator down here with the two lines, this is the IVR indicator. So this is one of TastyTrade's own custom technical indicators, and this is a good representation of what IVR has done in the past. So that tells me, you know, in the last few days, for example, if I really zoom in, is IVR expanding or contracting in the SPY? Well, I can see that in the last week or so, IVR has been coming down in the SPY, which if I'm a short options trader, that's exactly what I want. Now, if I didn't want to view this as a technical indicator on the chart, if I actually wanted some candlesticks that displayed SPY's IVR, all I need to do is go into the ticker symbol here, type name of ticker, so SPY in this case, dot IVR, and I will actually get a chart of the actual IV rank over the last year. So I'm looking at a 1-year chart here, and this is the IVR of SPY. So this is not SPY's price, this is the implied volatility ranks of the last year. So you really need to pay attention to implied volatility and implied volatility rank, other things that you need to pay attention to, which are very similar as far as they're kind of related to implied volatility, because the higher the IV, the bigger the expected move. When you go into the options chain, let's imagine I go into the 33-day cycle here, this monthly cycle for SPY. There is this brown ruler in the center of the options chain. Now, what is that? That is the range for the expected move of SPY in the next 33 days. That means that SPY is going to finish within this range 68% of the time. That's what the market is telling us. They think that 2/3 of the time, SPY should finish in this range, this brown range, in the next 33 days. And that's because the the IVX here is 16.7%, which means SPY should move up or down $18.47, up or down in both directions. That's an expected range of about $38, $39. And that's what that copper ruler is. That's about a $38, $39 range, you know, up or down $18.50 in each direction, right? And that is the expected range based on the implied volatility. And it's really good to know the expected move of a stock, because I see a lot of people make kind of ridiculous bets. Like, people will go and maybe they want to buy a call or buy a put. You know, they're going to do a long option strategy, kind of, you know, lottery ticket kind of play. But they'll go out here and they'll buy like the 520 put on SPY, which is only a 10 delta put. That's going to lose like 90% of the time. Actually, in this case, the TastyTrade platform is telling me I only have a pop of 5%. So I'm actually going to lose on this 95% of the time based on TastyTrade's calculations. And the reason I'm going to lose so much is because I'm so far out of the expected range, right? If I really wanted to buy a long put, you know, I really should be somewhere in the expected range to have any real shot of this thing winning, right? So be careful, you know, same thing with your iron condors. If you're doing short option strategies, you know, don't do a real tight iron condor like something like this here in SPY, because SPY, this is well inside the expected range of SPY. If I really want to make myself safe on an iron condor, I want to make sure that I am at least outside the expected range, if not well outside the expected range, right? That's how you make yourself safe, because you know 2/3 of the time SPY is going to finish in that brown ruler area. So, you know, I want to make sure that I'm well outside of that on my iron condors or my strangles if I'm doing a naked strangle as well. Now let's talk about the positions tab, because I've had a lot of viewers ask me about how I set up my positions tab here, you know, because you can have a million different columns of information here in your positions tab. Of course, I'm limited on space. So for me, you know, I've been selective here, exactly what I show here. I have P&L on the day, P&L since open, P&L open percentage, pop, DTE, days open, trade price, mark price, and then I have delta, theta, vega, and then indicators, which are just these little badges that tell me if earnings are coming up or if there's an X dividend date coming up. Now, every trader is different, and because you can set these columns to whatever you want, you know, you can have a million different things on this, but I really think that as a trader, you really need to have the trade price and the mark price on your options positions tab. You need to have those, and you need to have them side by side. You need to have the trade price. This is the price you either received a credit for or you paid a debit for the trade. So when you put this on, this was the price when you put it on, and then the mark is the current price of that options position. So this is a very quick way to gauge whether you're up or down on the position. So the way this works is debit trades have a negative trade price. So when you put on a trade for a debit, obviously you had to pay for it. So your trade price is a negative value and it's red. Now, if you do a credit trade, it's a positive value and it's green. So you can always tell whether that is a debit trade or a credit trade based on whether your trade price is positive or negative, also whether it's green or red. And the mark price are going to be exactly the opposite. If you put on a debit trade, then your trade price was negative, but your mark price is always going to be positive. And it's opposite for the credit trades. Your credit trades, the trade price are always positive, but your marks are always going to be negative. And then the difference between the two is whether you're up or down on the position. I hope that makes sense. Let me give you this example here. Let's take this Delta Airlines position here, this strangle here. Now, this obviously is a credit trade because it's a short strangle. Now, what did I receive in premium for this? Well, the trade price is 104. So I received an initial credit of $1.04 for putting on this trade. Now, what's the current mark price of this strangle? Well, it's 83 cents. 104 minus 83, that is what I'm up on the trade right now. So 104 minus 83, that should be 21 cents. So I'm up $21 on the trade. And you can actually see this if I go to P&L since open, I'm up $21 on the trade. So that just gives me the difference between the trade and the mark. But again, if I didn't have this here, I could easily tell whether I'm up or down on the position looking at the trade and mark price. And you need to get used to looking at this stuff. Sometimes it is a little confusing whether you're up or down on the trade, but as long as you know what you either received as a credit or paid as a debit on the trade, and then you see the current price where it's at, you just take the difference and that immediately tells you whether you're up or down on the trade. Now, some really interesting features I know a lot of TastyTrade users probably don't really use, they maybe don't even know how to use. There is this really cool feature. You see the CSV button, comma separated values. This is for downloading essentially a spreadsheet. So you could import this in something like Microsoft Office Excel or LibreOffice Calc or Google Docs if you're using that for your spreadsheet programs. I just click on CSV and I can download the CSV file and then import it into my favorite spreadsheet program. And it's going to give me a spreadsheet of this positions tab. Now you can also get CSV information for your watch list. If I go into the settings here and go to watch list and list, I can actually import a CSV file. So if I already had a CSV file of a particular watch list, maybe a user shared his watch list with me, he sent me a watch list via email, right? I can import his watch list into my watch list. So that's a very neat feature. You also have the ability to download the CSV files, I believe, in your history. If I go into my history, you have the CSV button here. Also under activity, you have the CSV button here. And again, depending on where you are when you click that CSV button, it'll be a different spreadsheet that you'll download for each. But obviously on the activities, I'd get a spreadsheet of basically this activities information. So that's very neat for those of you that do play with spreadsheets. I'm not much of a spreadsheet guy, so I don't really play with that often. Now let's talk about some of your trade analysis tools. Matter of fact, let's go ahead and analyze the strangle in Delta Airlines since I was already on it. You can go to trade and go to curve and then click on analysis, and this gives you your analysis, your risk analysis of this particular trade. Let me zoom out a little bit just so it's not as wide. And this gives you a good visual representation of your profit area on this strangle. You can see the green area. As long as I finish within the green area, I will make $104 max profit, assuming I hold this to expiration and it finishes within this area. Or I can start losing some money, some serious money. If Delta Airlines goes down, I start losing badly on that short put, or if it goes up, I start losing badly on that short call. And you can see exactly how much I would lose at expiration. Now what we're looking at right now, this is the risk profile at expiration. If you notice, there is this orange line that's kind of a curved line. There's an orange line running through here. This is the theoretical line. This is the T0 line. This tells you what you would expect to be up or down on this position. If Delta Airline, for example, moved down to $40, I can see that theoretically, because the value of the orange line is negative $14.92, so I would be down about $15 on this position if Delta Airlines moved down $5 tomorrow, right? But if I finished at $40 at expiration, which is like 33 days from now, I would actually win $104, right? So there is a difference between how much money you make at expiration and then how much money you make right now if Delta Airlines makes that move right now. And you can turn on and off the theoretical values or the expiration values. You can actually switch between the two. If I go up here, I have this expiration value here. I could turn that off to turn off the green and red coloring for expiration. And I could click on theoretical, and now I get the red and green coloring for the theoretical. And you can see I get a little bit different graph here. I still have the expiration line here, even though it's not colored. I do have the actual graph of the strangle, the line of the strangle, but I could turn that on. I go over here to lines, turn off expiration, and now I just have the lines, P&L Theo and the zone Theo. And this is the theoretical P&L. So this is our theoretical P&L graph, and I can see that if trading was happening right now, which it's not, the markets are closed as I record this, but let's imagine the markets are open. What would happen if Delta Airlines made a move to $48 right now? Well, it would cause me to have a theoretical loss right now of $43 on this position. So that is the theoretical risk. And again, if you want to, you can go back and turn on P&L expiration and zone, also turn on expiration and go back to the expiration risk profile. For me, I like keeping the expiration risk profile on, and I like having the line for P&L theoretical on, so I get a good representation of both the expiration risk and the theoretical risk. Some other things with this graph that you may find useful. I personally don't find these particularly useful, but if you want to, at the top you have P&L at expiration. So you have the same kind of P&L expiration information here at the top on this bar here. As for example, if I finish in the green area here, I make a max profit of 104, and you can see I've got 104, 104, 104, in that same range up here. And then when I start losing, I get red numbers, negative numbers. So that is your P&L at expiration, also represented up here in this bar. Again, I don't ever really look at that. And then at the bottom, I have delta theoretical. So these are the deltas on each of these strikes, basically. So I typically don't look at that either. By the way, you can actually change the Greeks. Right now we're looking at delta. If I go to gamma, I can get the gamma. I don't know why I would want to do that, but I could get the theta information as well. Typically, though, I just turn off all the Greeks. I really don't need anything in that bottom bar. One of the coolest things you can do with your curve and analysis tool here inside TastyTrade is you can actually go into analysis here in this right-hand side gutter here, and you can actually play with the date. You can also play with the implied volatility going forward. So for example, if I'm short a strangle, the last thing I want on my strangle, let me expand this. The last thing I would want on a strangle is for implied volatility to explode. So we get a serious volatility spike. Well, I can see what that looks like. Let me go forward one day. Let's imagine tomorrow when the market opens that implied volatility on my short put and my short call both are up 20%. That's a major increase in implied volatility. And now when I go and look at the theoretical P&L line, the T0 line, you can see how much lower it is. I'm basically losing. Even if we don't get any price movement, I'm already down $112 on this strangle just because volatility went so far up, right? Because a volatility spike hurts short options. Now, what if instead volatility came in by 20%? Let me change this to a negative 20% volatility on the short put and the short call. And now you can see that T0 line, instead of being below zero. Now it's well above zero. I'm going to be sitting pretty on this strangle if I get that volatility collapse, that volatility contraction that we always want when we do short options trades. I can also go way out in time, so I still have 33 days left on this trade, but let me see where this will be in, say, another 12 days, and I'll reset volatility. Let's imagine volatility doesn't move at all, but just time going forward. In 12 days, how would this strangle look? Well, I'll make quite a bit of money as long as I don't get a big price movement in either direction. Just 12 days of passage of time. That theta value, that theta decay makes this strangle a much richer proposition for me, right? I'm going to make a little money just based on the passage of time. And if I'm fortunate enough to get the passage of time plus a volatility decrease, let's imagine I get another negative 20% volatility decrease. This is what this strangle would look like. I would be at near max profit, right? If I hold this for about 2 weeks, plus I get a volatility collapse, as long as the underlying stock doesn't move much in either direction. That's the dream scenario with a strangle, right? That's not going to happen that often, but if it does, I'm going to realize a considerable amount of money on this trade. Now, there's a few other tools we need to talk about when you're analyzing your options positions or just your overall portfolio. One of the most important things you need to be aware of is your buying power and your buying power allocation. So one of the things you can do, let me go ahead and agree to this, is you need to click on this cap requirement button that brings up this window. So hit cap requirement right here. You get this window. One of the first things that you need to look at, and it's the easiest one to analyze, is allocation. Allocation tells me exactly how much money, how much capital I'm using based on each of my options positions, as well as futures positions, stock positions as well. I've got a mixture of a lot of things here, but it tells me what percentage of my current buying power I have sunk into all of this. So that is a very nice little representation. So it tells you, hey, is this position too big? Is this position too small? It's a really nice little tool. The other really cool thing you can do is you can do a risk analysis. So go to cap requirement, and maybe I want to do a risk analysis on all of my MES positions. I probably have, 8, 10, 12 different positions on in the MES futures. Well, I can tick that on, then I can go to risk analysis, and it tells me what my risk on all of these positions are if MES goes down 20%, also if implied volatility goes up 10%. So you can adjust these to anything you want. For me, I'm sticking with the defaults for purposes of this video, but you can change these. So price, 20%. So a change of up and down 20% in price, and IV shift, I'm using the default 10%. But the way this works is 20% down is this column, 20% up is this column over here. And then you have these columns in between where you can go down 4%, 8%, 12%, 16%, 20%, or up 4, 8, 12, 16, and 20%. And it tells you how these positions will do money-wise. And you can already see I would do very well if the market crashed 20% tomorrow, because I have a lot of bearish positions on in MES right now. I would make about $7,400 if the market crashed 20% and IV went up 10%. Now, in a market crash, if the market crashed 20%, it's probably going to have an IV spike up much more than 10%. Let's give it a much more reasonable number, 30%. Now, how much would that affect things? Well, in this case, it actually affects me negatively a little bit. So I must have some short options positions on that are going to be really hurt with an IV spike. So now the 20% crash, I still make a lot of money. I just don't make quite as much because some of my short options positions get hurt in a serious IV spike. And the cool thing with this is I can go in and turn on and off any of these positions and see how it affects things. Like if I turn off all these long puts here, you can see that affects things drastically, right, on my risk analysis here. And of course, I'm just looking at my MES positions. I can go back to cap requirement, and I can also add, add my Apple position, and I add my Coinbase position, and then go back to the risk analysis and see how all of these play out. Now that I've added those, the numbers will change accordingly. You can also add order legs. So if I had a pending order, an order that I not filled in, but maybe an order I'm thinking about, well, I can add that as well. Let me show you this in action. Let me go to something I don't currently have a position in. Microsoft, I don't have a position in right now. Let's imagine that I just want to sell a strangle in Microsoft. Let's sell that strangle. I'll do a one standard deviation strangle in Microsoft. Now, I'm not going to go ahead and send this. This is just a theoretical trade I might put on. Let me go back to the positions, go to cap requirement. Let me go, I'm already on the risk analysis tool. Let me go and click on order legs, add order legs from order entry. Let me click on that. And if I scroll down, you can see now this potential Microsoft strangle is calculated in the risk analysis. So before I ever put the order on, I can see how that affects my overall portfolio risk. And this is something you really want to get used to doing, because before you put on some trades, you may want to see how it affects your overall portfolio. Does it add a lot of risk to your overall portfolio? If it does, you may not want to put it on. Does it reduce a lot of risk to your overall portfolio? If it does, you may want to put it on. And that's really one of the things you got to get used to when you become a more experienced options trader, is don't look at positions as the positions by themselves. That Microsoft strangle is not just a Microsoft strangle. It's all of this other stuff in conjunction with the Microsoft strangle. And that's really what these risk analysis tools are used for, is you need to figure out what is your overall risk on your portfolio. You know, it's not about the one position. It's about, in this case, I've got about 25 different options positions on, right? And they all work as one position. Sometimes you want to look and see what your risk on that whole portfolio is. One interesting thing you can do is click on the P&L graph. There is this P&L button here. Click on that. And that gives you a great representation. This is basically your risk profile for all of your positions. So it takes all of your positions and it beta weights them. It beta weights the price to SPY. It also beta weights their implied volatilities and gives you a pretty good representation of what your overall risk is in your portfolio. And kind of like the risk analysis tool, you can actually turn on and off some of this stuff. For example, I could turn everything off, and maybe I just want to see the risk profile for my MES positions. I can turn that on. I can add my corn positions, my wheat positions, my apple positions. Maybe I want to add my NVIDIA positions as well. You know, you can really see how these positions work in conjunction with each other, and you can see if that position is working for you, or maybe it's kind of adding a little bit too much risk to your overall portfolio. So there you have it, just some of the really great features in TastyTrade that can really help you analyze options positions, not just analyze options positions as far as single positions, but also multiple positions. You can analyze your entire portfolio. And if you're an options trader and your broker doesn't offer some of these fantastic tools like TastyTrade, you know, some of these analysis tools, maybe consider switching to TastyTrade for your options trading platform. I do have a referral link in the description below. It's an affiliate link. I make a few bucks if you go and sign up. But if you're thinking about opening up an account at TastyTrade, I'd appreciate it if you use that link. Peace, guys.